Good morning, early birds. Thank you very much for joining us so early this morning. But this is such a powerful panel. I was really looking forward to it. So let's just get started. So at the previous editions of Singapore FinTech Festival, we discussed COVID crisis in 2020. And then in the last year, I remember we had a discussion about the poly crisis because of the war in Ukraine and all of the macroeconomic challenges that it caused. And as we get together again this year, I think the concept that now that we face a new set of challenges, I think the term that comes to mind is perma-crisis. So a permanent crisis through geopolitical challenges, global inflation, the slowdown of the economic growth, and we continue to face some systemic issues in the climatic challenges. However, there's silver lining to this as well, and have been some positive developments. So first of all, according to the Collins Dictionary, AI has become the word of the year, and we are seeing a lot of experiments and a lot of interesting new ways to adopt this, to use this technology. We saw governments coming together really to discuss some of the key policies for the future. Companies recalibrating their strategies and really focusing on ROI and profitability, and that's where we'll be probably touching this a little bit in our discussions. And the digitization of payments continues its triumphant rise all over the world. So let's talk about some of these key themes and discuss what we think about them. And I'll start with, I think, with the question of payments efficiency and what is the role that payments play in the face of all of these challenges. So as we think about this ongoing uncertainty, companies really are leaving no stone unturned in trying to drive efficiency of their businesses. So I'll be starting with Jim, maybe with you. What have been some of the strategies for increasing the efficiency of payments at Thread?
Yeah, thanks, Irina. I think it's an interesting question. The way I think about payments is it's not a standalone concept, right? It's about commerce. And historically, unfortunately, I think the way the world has been built, it really goes back to the early days of computing. Payments was the end result of a kind of a commerce transaction. So walking up and down a grocery store, filling a shopping cart, getting to a line, queuing, checking out, and then paying. The vast majority of digital experiences still to this day follow that flow. Like we're doing the same thing electronically, either on a mobile device or a kind of an internet-enabled device. But the future of IoT or connected devices, we've got panelists like Netflix and Amazon here who know it better than anybody. Commerce is embedded in the flow. And so for me, efficiency follows. And so I think it's the re-engineering of that workflow that's going to be driven to a large degree by leaders like the folks on this stage. But it's inevitable because, and by the way, like TerraPay down on the end as well, like P2P, it's all about payment flows. And quite frankly, commerce is about payment flows. So it's funny to me that it was always the last mile, as it was described, because inherently payment is at the heart of commerce. It's just historically was the way the workflow worked. It dropped at the end, and that's why you talked about dropping out. Like, why would you drop out at the end of a commerce experience? It shouldn't happen that way. So the winners of the future will inherently, in my mind, be efficient because payment will be built in from the beginning. You should talk about what Reed talks to you about, because the leaders of the future will force the conversation to put payment at the beginning of the discussion. And again, back to your point about AI, it's not like AI is new. My bank has had a bot for years. It just stinks, because the historic process was you could tell you were talking to, a machine. As generative AI gets better, again, commerce will get better because all of this, again, will be embedded. Embedded finance is a hot buzzword, but it's exactly that concept of just putting payment in the middle of the commerce flow.
Fantastic. Thank you so much. I love this. To paraphrase, payments make the world go round, right? So, Anwar, what do you have to say on this?
So as far as TerraPay is concerned, we look at cross-border payments, right? So not really the card payment side. So for us, it's about connecting to the world. We today connect to about 129 countries. And it all comes down to quality of service over there. And how have we done that? We've seen that the best way to do that is, things like direct connectivity, connecting to the local ACHs, local switches, UPI, SEPA, all of that. And then the way we've achieved that is through regulatory approvals. We've just gone around and getting regulatory approvals to do this so that we can connect directly to the switches. And that's been helping us a lot on the last mile, what you talked about. So that's really how we believe is going to improve the quality of service of the experience that we offer to our customers.
Optimizing. Thank you so much. Shalini, in your role as the payments head for APAC at Netflix, what is the role of payments that you guys see?
So I was chatting with Jim earlier. In Netflix, payments is really seen as a growth driver for our business, right? They've got it, they understand it. Our mission as a payments team is to make sure payments isn't the reason someone can't sign up for or someone leaves Netflix. Very simply, Netflix's goal is to entertain the world, and that means we want to make sure that our today's members and tomorrow's members have the right payment methods that they need to pay for the service. But also, there's a huge focus on customer experience, payment efficiency, and seamlessness of payments, and especially given our business model is a recurring model. And security, again, that's front and center of what we do. It's table stakes. So just unpacking that a bit, what does that mean in APAC? And philosophically, as a company, we want to contribute and give back to the ecosystem. We believe, a high tide raises all boats kind of thing. And so when we think about payments in APAC is very diverse, customers have very specific ways they wish to pay. And we've seen going local for local, right? So launching local payment methods in APAC has really helped us expand access to a brand new audience. The other thing that's really important, and we try to make sure it's front and center, is the recurring business or the recurring payment flow use case. Typically, while it's growing rapidly in Asia, it's typically much smaller than the one-time commerce payments. And so how do we make sure, and actually, when you think about it, it's good for everybody in the ecosystem because of the repeat nature of the payment, because it helps issuers with main financial institution status, top of wallet. And so we want to make sure it's front and center as product solutions are being developed, as people in the ecosystem are thinking of solving for payments. When we talk about efficiency, right, which is a second, efficiency and seamlessness, which is a second kind of, not second two, but another important pillar for us, we are really focused on retention and optimizing for that and optimizing for payment success. So we will use machine learning to make sure that, whether it's the fraud rules we use, whether it's smart routing, whether it's efficient retries, there's a ton of kind of focus we have on making sure, again, the seamlessness of payments. And when we launch a new payment method, as I was saying, we work a lot with the ecosystem. UX is front and center of everything that we do. So when we launch a new wallet, we'll have our product team, our design team work with our wallet partner to build that customer experience. Our philosophy is, why do you need 5 clicks when you can do it in 2? And so how do you kind of make that journey easy without having the negative trade-offs? And finally, security, again, front and center of what we do. We were the first to adopt tokens as a merchant. We are PCI DSS level 1 certified, and in its true overachieving nature, we do everything that PCI DSS needs and then some. So even the data we store in our servers is not only encrypted, but it's tokenized. So all the logic that we use internally is through tokens, and the only time we will de-tokenize it is when and if we need to send a PAN for processing. So it's a huge, I guess it's a long way to say kind of 3 big pillars for us, very, very important.
Thank you so much. And we'll touch on tokenization and payment tokenization specifically a little bit later. Now let me turn to Karen. Karen, you flew all the way from Mexico City, if I'm not mistaken. You've had a lot of experience across Europe and Latin America. So how do things look in this part of the world at Amazon? What is the role that payments and payment partnerships play, and how do you drive growth, expansion, and efficiency at Amazon?
Great. So at Amazon, we believe that financial inclusivity is the future of global commerce. And we see partnerships as one of the key ways to achieve this. And we have a great example here. If you haven't had the opportunity yet, you can visit our booth for our demo of programmable money. And we've done this in partnership with MAS, with Grab, with StraitsX, really to come up with the use case and test out whether the program designs, whether the technical architecture can work for a variety of retail use cases. And I give this simply as an example of how we experiment and how we work with partners, because at the end of the day, we're in 35 countries in our retail and digital stores with 30 different payment types. So really, it's going to take a village, as you say, to bring that all together of current players, of new entrants, certainly of regulators, to make that successful for our customers. And that's something that we're very proud of, and really proud as well of being able to take the learnings from these partnerships into new places. So, for example, the Mexican government is looking to build on its instant payment rails, CODI, to build more features and innovation on top of it. And they asked us to bring the learnings that we have from working with partners and regulators in India, in Brazil, in Singapore, and to be able to help them. And we really see not only bringing all these partners together, but bringing the learnings as key to moving forward.
Fantastic. Thank you so much for sharing. Before we move on to the next topic, I want to remind everyone that this is an interactive session. There is Slido. I'm not sure if you're able to see, but I have this iPad with me, and we'll probably be taking a couple of questions throughout. So I'll keep my eyes on this little device. So let's turn to the next topic, inclusion. I think this is a very important topic for a lot of us. So as Shalini, you mentioned, this is front and center. But I want to start and turn to Jane. So Jane, what are the trends and some of the new new models maybe and shifts related to digitizing financial inclusion that you are seeing? And how are these leveraged to bridge the gaps, the obvious financial inclusion gaps? I think SCB probably has a lot of that experience, being one of the key banks in Thailand.
Yes. So one of the key trends that we see in recent years that we think is one of the important tipping point is actually about how digital payments have grown in recent years, especially during COVID, when it's probably difficult to use cash and physical payments, and how that growth has stayed on even after COVID is gone. So for example, for our bank, before COVID, we saw about 1 billion transactions a year on our mobile banking. This year, we already saw about 7 billion transactions, so that's 7 times growth within just a couple of years. And that already accounts for about 90% of all of our bank's transactions. So with such a shift, what it means in terms of what we can do in terms of financial inclusion is that for the underserved segment, who usually they may not have official proof of income, and hence it has been difficult for them to get the loan from the financial system. So for example, these people might be a food delivery person or a small online merchant. And now with the kind of availability and the depth of data that we now have, the banks and the lenders in the market can now use this data with the AI and machine learning technology to be able to more accurately estimate their income and also credit risk pricing them. And now we are able to start giving them small microloans and start helping them build the credit history within the financial system. So these surge of digital payments and the data that we now have is a huge shift and is a game changer for banks and non-bank lenders to be able to tap into these untapped segment and be able to start providing a cost-effective digital lending services that help bridge the gap for these segments.
Thank you so much. So, Karen, what has been the journey and the current state of financial inclusion in Latin America?
Well, in Latin America, we really look at the diversity that's there, and we look at what our customers need, and we meet them where they are. And I know a lot of you have a lot of depth in the Asia region or perhaps in Europe, but how much do you know about the diversity within Latin America? So I'll give you two examples. If you look at Brazil, it is a highly banked country. It has a lot of fintech innovation. And really, they introduced Pix in November 2020, and the uptake is amazing. They have 84% of Brazilian adults use Pix, the instant payment rails that are like UPI or Pay Now, and they've brought 71 million people onto digital payments, which is fantastic. And so we are there. We implemented Pix. We're advocating for recurrent payments, which is super important, and really working with the regulator to push that forward. So that's where we are in Brazil. In Mexico, they're in a different place. 90% of Mexicans use cash on a daily basis, and only 48% have a bank account. So there, our innovations are for cash. And for stored value. So we, for example, went to 130,000 mom and pop shops and enabled a pin on receipt, which might seem like super basic from many years ago, but we've seen, again, an amazing uptick of that because that's the customer need and that's what they want. And we innovate according to that, and not only for our consumers, but for our sellers. And so we work in partnership, back to your original question, with the Mexican government, with programs from the US State Department to focus on women entrepreneurs and other small businesses. And we brought 18,000 small businesses online in Amazon, with 40% of them being owned. And so like this beautiful Mexican jacket, which has their monarch butterflies, and some of the kinds of alebrijes, if any of you have small children and have watched Coco 100 times on Disney, that's something that we're passionate about bringing those artisans online in many different ways.
Thank you so much. So very inspiring. There is, I think, let's face sort of a little bit of an elephant in the room. With so many sort of economic challenges, there are a lot of incentives to go and try and cater to kind of the higher income group. So is there a system, a world, a model where profitability and going for the money and financial inclusion are met in one place? And I'm going to turn to Ambar and Jane for this, please.
Sure. I don't think this is exclusive, mutually exclusive. In our business, we do small value instant payments, right? And that then becomes a business of scale. Regulatory is a great enabler for us. It actually drives financial inclusion. And in our business, we're not fighting each other, we're fighting cash, right? And getting those people onto the financial ecosystem is really what drives this whole business. What we've done is, and what we've seen is, we've been moving billions every month, and scale and quality of service actually drives this thing. And it helps when more and more people come into the financial ecosystem. We see we're transferring money. We see families coming on. First, you see. The guy was sending money to his mother, now he's sending money to his wife, children, etc. We've seen on Christmas, for example, they send money to 4 or 5 different people. And that's very encouraging for us. So I don't think profitability is correlated with any of regulatory. Regulatory is just an enabler for our business. And we've been profitable for 2 years now. It comes with scale. Payments is a business of scale. We're trying to make bips of a transaction. Once you achieve scale, you learn how to achieve scale. It's there. Profitability is there. Jane?
Jane, yeah, what a experience.
For us, I think in terms of when we talk about profitability and financial inclusion, actually we strongly believe that the financial inclusion initiatives that are going to last will have to be the one that fund itself. So for example, for our digital lending business, where we offer digital loans on mobile apps to our customers using the AI and machine learning technology to do the instant credit scorings on the mobile. Actually, on that business, we see good profitability level and also see good growth on the portfolio as well. And the way it works is that for our target customers who are usually the underserved segment, before this, for them to be able to get access to funding, pretty much they have to rely on loan sharks, and these happen across pretty much a lot of Asian countries. And they have to pay as high as 200% interest rate a year in able to get that kind of access to the money. So the lending service products that we offer, it's still somewhat high yield at about 20 to 30% interest rate, but that's still a huge improvement to our customers in terms of what they've been paying before. And 20 to 30% is still a good level for the lenders and the operators to be able to have a sustainable profit and be able to keep providing loans to this group of segment. Now, the 30% is actually the interest rate cap that the regulators impose on the lenders. So the fact is, if the interest rate cap could be a little bit higher, then the lenders would be able to take on even more risk. They'll be able to include more people, offer more loans to more needed customers, and take on a little bit higher credit risk customers. So it is really kind of an ongoing collaboration between lenders and regulators that need to happen in order to try to optimize for better financial inclusions while making sure that the rate that charged is still fair and allow for sensible profit for the operators so that everyone in the equation can benefit and the financial inclusion itself can be sustainable in the long run.
Fantastic, thank you so much. So scale, and I really like this real example of AI application in the digital banking experience. Okay, so let's move to our next topic, and then we'll touch on maybe some questions from the audience as well. So the next topic that I wanted to touch on is tokenization. And it is a buzzword these days, and it's a very big theme here in the festival. But it also has quite a few different sort of applications and use cases, and in payments, there's specific kind of specific applications. So Shalini, I'm gonna turn back to you. So as an industry, where do you think we are in the payment tokenization journey, and what can we do better?
Yeah, thank you, Irina. So I'll touch upon two use cases, payment use cases of tokenization. The first one is network tokenization or card tokenization. On that journey, I think we are somewhere in the middle of the road, right? There are, in APAC, there are countries at different stages of evolution of adoption and usage of tokenization. So you have best-in-class countries like Australia, where we see 90% of our cards which have active tokens on it. And then there are others that are at kind of still trying to get off the ground. When we look at tokens, right, they at a transaction level, they do perform better than PANs. But when tokens fail and we retry on PANs, we get an even better performance, right? So token plus PAN performs better than just tokens or just PANs. And so it's just, and when you think about like what is the benefit of tokenization too, right? One is security, which we are very pro and all for. And the other is seamlessness of transactions. So when someone's card is lost or stolen, the tokens update in the background and commerce doesn't get disrupted. On the security piece, checked all boxes. On the seamlessness of transaction, we've seen lifecycle management is not where we would like it to be, right? Generally across markets. There's still kind of gaps in that, and there are issuers who are hesitating to do LCM because of privacy reasons and so on. So I think we'd want to see a lot more progress if tokens need to work and succeed on the LCM side. And, you know, it's just the start of the journey or middle of the journey, long way to go. And, you know, till such point, both tokens and PANs are super valuable. So that's kind of one use case. The second use case is around the newer payment methods like wallets. And we've been able to tokenize wallet credentials and store that as a merchant so that we can make recurring transactions. But on those tokens, there's no interoperability. So we are stuck with one payment service provider tied to that wallet. Now, for anyone running a large business, that's a huge dependency, huge risk. So from an ecosystem perspective, we want to see interoperability even in those tokens so that we are de-risking ourselves, but also making room for innovation and other optimizations that need to happen. So those would be kind of it's the very, very start of the journey for wallet tokens or new age payment method tokens, and maybe mid-road for card tokens.
Fantastic. So let's compare insights to what Amazon thinks.
Honestly, we share a lot of the same opinions that Shalini just expressed. I think the only dimension I would add is simply what can be done for the customer experience with the tokenization. So for us, even in sort of a more basic, like the card art and the metadata, so that when a customer goes to a payment page for Amazon, they can actually see which card it is, rather than try and remember the last 4 digits. So when we've implemented that with the token, we've seen meaningful uplift in checkout conversion, back to not having the drop off, and that's just one of the benefits. A small benefit, like on top of the fundamental security and other points that Shalini did, but we're always looking for the ways that we can innovate for customers with new innovations. And then in terms of the future, we see the tokenization of bank accounts. So then the customer doesn't even have to give a merchant any details. So we're excited about the potential and also agree that it's just the beginning.
Fantastic. So I see a lot of nodding heads. And Jim, I want to turn to you. So Thread is known as an innovator in issuing processing. So how do you see tokenization there?
Yeah, again, hitting on the points that Audrey stated, and one that Karen made earlier, the way I think about tokens, and we've made a big deal out of it like it's a new concept, but I always like to remind people, like when you got your first debit card, it's a token. It's a 16-digit number that's not associated with the bank account and routing number, right? So as an industry, we've been tokenizing for a while. I think the difference we have now, and where I think you see the innovation is, and Karen mentioned programmable money, and what was stated is the fact that you can actually put data around this digital token, the network token, that gives it unique properties, like it should only be used with this merchant, or you can actually attach dollar amounts or metadata to it. And so I think the concept here is one of improving on what historically been a static PAN or static token, that when it's used in a standardized way, it can travel. And like the proprietary wallets, it can be used because people know what to do a 16-digit card number. But in the sense of these newer network tokens, now they have other properties. Like I know it's bound to a certain device in the case of an Apple or a Google phone. I know it should only work at Amazon or Netflix. I can bind it through my issuer potentially to certain dollar amounts or certain transaction types. So it does a couple things. It reinforces the trust that the consumer has in that credential. And if it gets compromised, they know it should stop at that first transaction. It shouldn't have that run-on effect. And for the merchant, they should see higher conversion rates, which is what the merchants are wanting, and technically at a better price point, because in theory, if again you're able to take fraud out of the system and create higher value, again, good things happen for everybody involved. So from where we sit, we want to participate in all of that. And again, this goes to the point Karen made about also other payment types, because again, we now live in a world of multiple rails, and interoperability is important, because there's this really kind of funny dynamic happening where, on the one hand, over the 30 years of my kind of working career, my life's gotten easier because Visa and MasterCard work in almost every market I go to. So you got this kind of homogenization of payments. But on the other side, now you've got like the PIX systems of the world, increasingly the domestic schemes and domestic wallets. And so those make it more difficult in some ways. They work great domestically, but the world's increasingly flat because of the internet and the Internet of Things. And so you got these weird dynamics happening that in some ways we're moving forward, but we have to always keep an eye towards interoperability, because whether you're a large merchant or even a startup these days, like TerraPay is an example, the world is flat. If you're a company born in the last 10 years, you think about the world and very kind of, I can go into any market at any time. Now, obviously, you got to deal with regulatory considerations, but you shouldn't be constrained because of payments, friction. So for me, the concept of tokens still has a lot of runway on it, a lot of benefit to it. And again, I think about it in terms of kind of programming or programmability of money, and putting controls around it that should enhance the experience for everybody.
Fantastic. Thank you so much. I want to turn to some of the questions that were asked by the audience. And there is one that is looking into the future of payments and digital banking. What do I do here? how do I show the question? So the question is, to the panel, with lesser need for intermediaries, what do you think is the future of payments and impact to payment facilitators like Visa, MasterCard, etc.? So who wants to start? I'm like, Jim?
Sorry, one more time on the question, because I saw this popping up.
What do you think is the future of payments and impact to payment facilitators like Visa and MasterCard? Well, let's take it broadly, generally. What do you think is the future?
You know, full disclosure, I worked at Visa for 20 years. I've got a lot of friends in the audience, I think, so I'll be careful. No, but in all seriousness, I kind of hit at this a second ago. The networks, you know, are not going anywhere anytime quickly. And the reason I say that is, in the 20 years I was at Visa, starting in 1999 through 2020, there was a lot of events that people predicted the end of these companies. I mean, so late 90s, early 2000s, it was the internet came along, you know, and the world's going to be flat. You don't need a fixed cost to build a network. Anyone can build a network. Well, it didn't happen, and Visa and MasterCard got, you know, bigger. You know, then the mobile network operators got into business. Mobile was going to completely disrupt it. No, you know, Apple, Google kind of ride the rails. You know, now we sit with crypto tokens, but most of the crypto companies use Visa and MasterCard as on-ramps and off-ramps. You know, other payment flows, you know, push payments. You know, Zelle in the US is the network, you know, of the banks doing P2P. Only did that, by the way, because, you know, Square Cash and Venmo kind of got into that business, facilitated by Visa and MasterCard, and now Zelle rides mostly on top of Visa and MasterCard. You know, these are smart people. They'll continue to evolve, but the key theme I want to hit on is the trends in payments take a really long time. You know, you started the conversation about AI, and like it feels very disruptive and right on top of us. But in payments in my career, like most payment things take 10 to 20 years to really take root. The example I'll give you, the real world one is, it's hard to believe, but this year in September, it was 9 years since I was on the stage at Money 2020 in Vegas when we announced Apple Pay. And I remember, like, within months afterwards to the year afterwards, people, you know, smart people in payments saying, well, it failed because it hasn't, you know, how many cards and phones have been, you know, tokenized? I'm like, guys, like, this was game changing. You got to let it wait. We're sitting here 9 years later, and it's still in its infancy in some ways. And no one can deny that Apple Pay and Google Pay are an important, you know, player in the ecosystem. So I tend to take these things in the long view. So when I think about, you know, what's going to happen and be disruptive, we've seen some of it. You know, we mentioned PIX. There's a lot of other domestic schemes that are happening as a result. Quite frankly, the geopolitical disruptions you talked about, I think, are the biggest concerns for those folks, as well as regulatory, because a regulator can come in tomorrow and just say, you can't do this, you can't do that, and it completely changes the paradigm. But you know, when you have sanctions in Russia, all of a sudden other countries wake up and say, wait a second, how can I have a U.S. company dictating payments, which again, as I said before, is commerce. So while I think there's a really long, successful runway ahead for those companies, given their scale, as was mentioned earlier, I do think, you know, disruption is in the cards for all of us. Like, innovators are waking up every day thinking about the gaps in the payment systems. You know, we talked about, you know, early entrants, you know, or financial inclusion. Almost all the financial inclusion initiatives I saw over my 20 years were driven by outsiders. It was innovators on the fringes, earned wage access, you know, gig payments, all from third parties. You know, the non-card rails, you know, all from outside.
So, Jane, I just want to ask you the same question, perhaps maybe a slightly different angle. What are some of the emergent trends that you're really excited about? What's the future looking like for digital banking?
For me, I think one of the emerging trends that we would probably keep an eye on is generative AI, and especially on the non-code software development approach. And what that means is basically this no-code software development approach now basically makes it easy for any non-technical users who may not have any coding skills to be able to write their own software and fine-tuning the existing ones very easily and quickly. And we think that this tech is going to come in and it kind of help democratize the way that we make software and make it available to a wider general populations, and it's no longer going to be limited to just professional software developers anymore. And what it means for us as an organization is basically we think that there will be a lot to think about in terms of talent planning, in terms of in the future, what kind of talent would you want to recruit and have in your organizations? What kind of training do you think will now be relevant for them if the basic coding skills may not be as important as it was before? So these are, we think that this is going to be a big impact into the industry, and it's definitely going to be the tech that we're going to see how it's going to evolve in the next 3 to 5 years.
And I think President Taraman touched on it on day one. AI is going to change the world, or at least that's everyone's expectation. But I think I do totally agree with you. With the current talent gap, especially tech talent, AI is going to support and help us close quite a lot of the existing void. Ambar, how about yourself? In cross-border payments, what are the things that you're most excited about, or what's the future looking like?
So what I'm excited about for digital cross-border payments is the number of people actually coming on board into the formal financial ecosystem, right? And that's most exciting in the developing markets, because while we talk about bank products and payment products, it addresses a different customer segment, but we're really looking at the bottom of the pyramid for small value payments. And it's very encouraging to see every month you're getting another 1 million people actually into the formal ecosystem, which again, they will rise to the top and then hit Netflix and Amazon at one point. But at this time, they're still, working on getting money for food, for education, for shoes, for Christmas gifts. And that's most heartening. I think one good thing happened out of COVID is it brought a whole bunch of people into the digital ecosystem, and I'm really encouraged by that.
Fantastic. So how do things look in the online commerce? Amazon, Karen, what are you excited? What are the things that you think that are the drivers of the future?
I think the things that excite us are those innovations that drive financial inclusivity, cost effectiveness, and efficient payments. And for us, 2 of those would be instant payments, like looking at how those grow, interoperability, cross-border abilities, and CBDCs, as we've heard so much about over the last 3 days.
Fantastic. Shalini, what are you excited about?
From Netflix payments perspective, I think the trend we are watching is around open banking and real-time payments. So real-time payments is here. But how it's going to evolve in different markets and as a use case to support merchant payments, it's complicated, right? There are different commercial models, different incentives for different people in the ecosystem, the user journey. So how all those get solved for is something we're keeping an eye on, we're excited about. But whether it's here to stay for consumer payments is to be determined, but it's definitely here.
Yes, here and coming. Jim, there's a couple of questions here for you. I'm going to pick probably one of them that has the most votes. Jim, you mentioned embedded finance. How can a non-bank issue payment cards?
Not easily, unfortunately. No, I mean, look, as I said to start the conversation, embedded finance is commerce, right? Every one of the players here touches part of the payment rail. And so for me, embedded finance are companies, quite frankly, like the Amazons and the Netflix that sit on a large consumer population. And that consumer population, historically, you'd say, well, Amazon's a merchant, so they're taking payments. But they have sellers, like Karen mentioned, that they now are bringing on, that have, they need to pay out to. And some of those may be very small sellers. And so it's not traditional kind of merchant settlement arrangements. And then back to what TerraPay does, these may be cross-border. And so to me, it's about payment flows. And so in the embedded finance, if someone wants to get into the embedded finance space, you've got to come in, unfortunately, to a regulated payments ecosystem. So for all the innovation, all the people outside in this hall that talks about the innovations or technology or capabilities that can bring to make it easy to get into payments, the fact of the matter is somebody's got to be a regulated entity. To issue a Visa or MasterCard, it's not like you can call up your friend at Visa and say, hey, issue me a card. I've got to go find a bank, because Visa can't, Visa can give you access to their rail, but they can't give you access to the financial system. You've got to go find a financial partner. They are still, at the end of the day, both Visa and MasterCard, a network of banks, both on the issuing and acquiring side, who take the financial responsibility in their markets to the regulators for being compliant. And so payments at the end of the day is still a heavy compliance exercise because unfortunately there's a lot of bad actors we haven't talked about today, and payments is a trust and risk business. So honestly, you've got to go in eyes wide open. And you've got to find a bank partner. There are a lot of people that will get in the space to help you. We can help you get there. Others can help you get there. Visa, MasterCard, Discover, American Express, other local banks can help you get there. But you've got to have a partner that's going to help you manage the compliance effort. And then there are technology partners by the dozens, hundreds out here that would be more than happy to help you issue cards. We would love to, but at the end of the day, it's a compliance game. And it's more difficult than I like it to be in most cases, but it can be done. It's just there's work to it.
Yes, and I don't think there's any shortcuts in it, unfortunately, as well.
Well, there used to be, but in the macroeconomic environment we're in now, that you've seen that dry up. I think it'll expand again, but right now you've seen a flight to quality. Even the banks are now pulling back to say,
Yes.
Who do I want to bank? I think that will loosen up again, but this is a very tough environment.
Really important. Another question to Shalini and Karen, which I'm going to ask is, what payment methods will you be adding this year in APAC and LATAM? Who wants to start? Shalini.
I can go first. There are a couple of partners we're excited to work with for direct carrier billing, so we'll light up a few more of those. And we are, as I was mentioning earlier, we are evaluating bank-based payments. So the minute we're happy with the user journey, happy with the success rate and drop-offs and conversion, that's a space we're watching out. And if it works out, we'll potentially add those.
Fantastic.
For us, we're always evaluating what payment types can best meet our customer needs, but we don't pre-announce any of our payment integrations. So.
Of course. Okay. All right. Fantastic. Thank you so much. I do have my last question, which I was really looking forward to asking. So since this is the beginning of day 3 at Singapore FinTech Festival, I hope you enjoyed the first 2 days. So what have been some of your favorite sessions, and which sessions will you be looking forward to today? Ambar, let's just go in order.
I liked yesterday's debate on stable coins. I think that was very interesting. And looking forward to the World Bank presentation today from Ajay Banga.
Ajay Banga and Ravi. Yes, that's going to be a big one. Jane?
For me, the session that I'm looking forward to today is actually the session by JP Morgan on self-payments with AI. Well, as a bank, we always have a lot to do in terms of forecasting and managing cash flows, and I'm keen to hear about their use case on the self-driving treasury, about how they use the AI technology to try to maximize the free up capital and reducing costs. I think that's definitely going to be one of the big use case in the real world applications of AI within the banking sector. So I'm excited to hear about the latest development on that today.
Thank you.
Yeah, for me, I'll something a little probably less obvious, but having had a seat kind of at a global view, I was in Money 2020 in Vegas. We stretched from Japan into the U.S. It's just been to see the excitement. Again, the macroeconomic environment has been pretty rough around the globe the last couple of years, but to see the number of vendors here, the people here, and quite honestly, it's not just, a lot of these become, like an alumni reunion of sorts, and you see the same people at the different shows. But what's been really interesting to me is the fact that the show's been open. And we've had this really interesting mix of people that are kind of off the street coming in to understand what's happening in fintech. And so the Asia Pacific environment, right now is a very hot growth market for us, and you see it here. And so it's been a great kind of experience to see how payments is just across the markets here, not just Singapore, but all of Asia is really on fire and a lot of interest. So it's fun to see that the next generation, a lot of students coming through are very interested in this space. So it's exciting for me.
And I think it's intentional, actually. Bringing more people into the ecosystem is really important. Karen?
So there has been so much exciting content over the last couple of days, but what I've been super impressed with is how many kick-ass women have been presenting. And so apologies for the language, but you can see from my colleagues on stage and the IMF director and even on the founders peak, like Dr. Sarah, who had done the telemedicine in Pakistan. I mean, just amazing women who are showcased here, and that is a change from a lot of conferences, and I think that's amazing. And for today, I'm going to do a shameless plug for a Project Orchid session we have at 3 o'clock, which is our programmable money, and please come to our booth and check it out.
For me, I'm just going to add on to what Jim said, but one of the conversations we were having before this session is I'm based in Singapore and I'm the minority here. None of my panelists are actually from Singapore, so it just gives you a sense of the global scale of this event, which is always, always exciting to see people like you, payment experts, fintechs, coming from across the world and gathering here. The session I'm most excited about is like Amber, World Bank, Ajay Banga and Ravi Menon, two great leaders talking about ESG. Thank you.
Thank you for sharing all of your insights. I'm so sorry. This has been an incredible experience. Thank you very much. Thank you for joining us, asking your questions, and good luck for the rest of your day. Let's finish on a strong note. Thank you.